A lot of people have already sort of put 2022 in the books, more or less. And they're looking ahead to 2023, economic conditions, the potential for the Fed to end its tightening cycle, not necessarily pivot. And of course, a lot of eyes on China and the rest of the world economy. Do you see a little bit more of a growth story for stocks in 2023 versus where we are right now?
Well, I think we are at the point where the data that are coming in are not really good news for the Fed. Inflation remains high, much higher than the Fed would be comfortable with at this point of the cycle. And at the same time, the economy still appears strong. That means that what the market is pricing in terms of terminal rate may actually be way too optimistic. And so we are very concerned in terms of a more significant slowdown than what the market is pricing into 2023.
And I believe the market is pricing in somewhere around 5%. We've been oscillating around that level when it comes to the terminal rate. If that's too optimistic, what do you think is probably more realistic for the Fed?
The market has been focusing very much on the pace of increases. I think what they need to focus on is on the terminal rate. And whether this terminal rate will be 5.5% or 6%, it very much depends on how well anchored inflation expectations are.
But I'm sorry, but is the level of rates right now as important as the idea that once they reach that level, they're going to stay there? Like, what's more important to the markets?
I think the idea that they're going to reach a certain level and then soon after are going to start cutting rates is not consistent with the idea that the Fed is effective in its monetary policy. Interest rates from a monetary policy perspective are not supposed to be taken up and down from one quarter to the other.
Yeah, I've noticed
if they raise them and then subsequently have to cut them, that means that they over-tighten. We have some financial crisis that they need to deal with, and that's why they're doing it. So the expectation is they will raise rates probably above 5% given incoming data, and they will have to stay at this restrictive level for a period to come.